Welcome back, everybody, to the deep dive. This time, we're going deep on Jammu and Kashmir Bank.
J&K Bank.
J&K Bank, yeah.
Right.
And we've got a lot to work with here. We have their official financial reports for the quarter and 9 months ending December 31st, 2024.
Wow.
We've also got a presentation that they prepared for an investor conference call, and we have the transcript of that actual call.
Excellent.
Which is, chock full of insightful Q&A and all that good stuff. But one of the things that's really interesting about J&K Bank is that they've been on kind of this turnaround story, and they're operating in a region that's seen 2 elections in the past year.
Right.
And to top it all off, they've got a brand new CEO who just came in at the very end of December.
Right.
So talk about a trial by fire.
Absolutely.
So let's see how they did.
Yeah. Well, before we get into the numbers, I think it always helps to understand the context of the institution. So, they've been around for over 85 years. They have a very strong regional presence and are listed on the stock exchanges. And in recent years, they've done a remarkable job of bringing down their non-performing assets, their NPAs.
Now, for listeners who maybe aren't as familiar with that term, what does that actually mean for a bank?
Sure. So those are essentially the loans that are not being repaid as expected.
Gotcha.
And they've gone from a pretty concerning 12% down to a much healthier 4%.
Okay.
It's a huge accomplishment.
So it sounds like they're already starting from a pretty good position of strength.
Absolutely.
What do these latest financials tell us about how they've been performing?
Well, the Q3 and the 9-month results ending December 2024 show some very positive signs.
Okay.
Their profit after tax, or PT, essentially their net profit is up by a significant 26.2%.
Wow.
Compared to the same period last year.
Okay.
But the question is, what is driving this profit growth?
Yeah. Is it just a one-time thing, or are there some fundamental changes happening within the bank?
It seems to be a combination of factors. Their return on assets, or ROA, which is a measure of how efficiently a bank uses its assets to generate profit, has also improved, climbing from 1.15% to 1.34%.
So it sounds like they're getting more profitable in general.
That's right. They are becoming more profitable.
Okay. And what about their deposit growth?
Right.
Because that's always a pretty good indicator of, how much customers trust a bank.
Absolutely. And their deposit growth is quite healthy. It's up 9.7% year over year.
Okay.
So this strong deposit base is really important because it gives them a low-cost source of funds that they can then use for lending and other activities.
Gotcha. So it sounds like we've got kind of the trifecta here, profitability, efficiency, and then customer trust as well.
Right.
What else stood out to you from the reports?
Well, one key takeaway is a shift in their lending strategy.
Okay.
So they're moving away from large corporate loans and focusing more on retail loans,
Okay.
especially in segments like micro, small, and medium enterprises, or MSMEs, and agriculture.
No, why is that? Is it just because they can get higher returns from those kinds of loans?
It's partly about that, but it's also about diversifying their loan portfolio and reducing their risk.
Okay.
And interestingly, their personal finance loan segment has the lowest gross non-performing assets ratio, only 0.84%.
Wow.
And that's significantly lower than their ratios for trade or financial markets loans.
So they're going after the stuff that's less risky and potentially more profitable.
That's right.
Okay, so is this sustainable, though? I mean, how can we know if this is something that's going to keep going?
Well, that's a great question. And to answer that, we'll have to get into that investor call transcript
Okay.
and see how the CEO addresses those challenges and opportunities.
Okay.
But another interesting detail from the reports is their focus on operational efficiency.
Okay.
So they've managed to decrease operating expenses, particularly employee costs.
Now, is that just a nice way of saying they're firing everybody?
Well, some of it is due to upcoming retirements,
Okay.
but they're also actively focusing on improving employee efficiency,
Gotcha.
which suggests a long-term strategy to manage those costs and maintain their performance.
So they're trying to, do more with less.
Exactly.
Okay. Well, very interesting. Before we move on to the CEO's perspective, were there any other sort of interesting things that popped out at you?
Yeah, one thing that caught my eye was this new scheme that they've launched. It's called Kars Se Mukti,
Okay.
and it's designed to address non-performing assets.
Okay.
Now, it's a bit early to tell how effective this will be,
Uh-huh.
but it does show that they are being proactive
Yeah.
about tackling this issue head on.
Okay. So we've got a pretty good grasp of their financials so far. Let's see what the CEO has to say about all this.
Sure.
What's the bank's strategy and what's their outlook for the future?
Right.
And usually the investor call Q&A is where we get those really juicy details straight from the horse's mouth.
Absolutely.
Ah,
And the new CEO, Amitabh Chatterjee, shared some very interesting perspectives during this call.
okay.
He expressed strong confidence in maintaining a 4% net interest margin, or in.
Now, for those of our listeners who maybe aren't as familiar with financial jargon, could you explain what any means and why it's such a big deal?
Sure. In is basically the difference between the interest a bank earns on loans and the interest it pays on deposits.
Okay.
So it's a key indicator of the bank's profitability,
Okay.
and 4% is quite impressive.
Yeah.
And the CEO's confidence stems from a couple of factors.
Well, I want to hear what those are. What is he basing his confidence on?
Well, he pointed to their dominant market share in the region
Okay.
and their impressive CASA ratio.
Okay, now I know that's another one of those terms. What does that mean?
Right, so CASA is basically the proportion of current and savings account deposits
Okay.
to total deposits.
Okay.
And CASA deposits are generally cheaper for banks than term deposits.
Uh-huh.
So a high CASA ratio means that they have a lower cost of funds, which gives them more flexibility when setting lending rates and maintaining that healthy in.
Okay, so that's one piece of the puzzle. What else is he doing to try to hit that ambitious target?
Well, he's also outlined plans to increase their fee-based income,
Oh, okay.
which is a great way to diversify their revenue streams.
Okay.
So this will involve increasing sales of third-party products like insurance and mutual funds,
Uh-huh.
and focusing on non-fund-based businesses like bank guarantees and letters of credit.
Okay, so you don't want to just rely on one source of income. You want to have multiple.
Right. You want to diversify.
Okay,
Yeah.
that's smart, but, no business is perfect. Did he acknowledge any potential challenges that they might face?
Yes, he did.
Mhm.
He acknowledged the challenges of, they need continued deposit growth to support their lending,
Right.
and also the uncertainty surrounding the overall economic climate.
Sure.
I mean, these are factors that are largely outside their control,
Mm-hmm.
but they need to be managed effectively.
Makes sense. Were there any other key takeaways from his comments?
Yeah, he also emphasized their focus on sound underwriting practices
Yeah.
and selective account ratings to manage the risks associated with expanding their lending activities beyond their traditional stronghold in Jammu and Kashmir.
Oh, right.
So they're venturing into corporate lending in other parts of India, which can be a lot more competitive and risky.
Mm-hmm.
So his emphasis on risk management is quite reassuring.
So it sounds like they're trying to be prudent while also going after these new opportunities.
Exactly.
All right, well, this is great. We've gotten a lot of information already from the financial reports and from some of the CEO's comments. Let's dive into the details of that investor Q&A in our next segment.
That was good.
Because there's always some fascinating back and forth between the analysts and the CEO, and you can really learn a lot about the bank strategy from that.
Absolutely.
So stick around, everybody. Okay, so picking up where we left off, let's take a closer look at that investor call Q&A.
Right.
One analyst was particularly interested in this recent spike in loan yields,
Okay.
essentially how much the bank is earning from its loans. And obviously that's a key driver of profitability. So what did the CEO have to say about that?
Well, he attributed it to an upward revision of what's called the marginal cost of funds-based lending rate, or MCLR.
Okay.
You can think of it as like the minimum interest rate that a bank can charge on its loans.
Gotcha.
So J&K Bank, they adjusted their MCLR upward last quarter,
Uh-huh.
and that change took effect this quarter,
Okay.
hence the higher loan yields.
So that explains the recent spike.
Yes.
But that same analyst had a follow-up question about the bank's overall margin trajectory.
Okay.
So, with J&K Bank expanding their corporate loan portfolio, how are they going to maintain those healthy margins when competition in that space can be fierce?
Yeah, he acknowledged that challenge,
Okay.
but he highlighted two key advantages that J&K Bank has.
Okay, let's hear it.
The first is that their operating costs are lower than many other banks,
Okay.
particularly in areas like staff expenses.
Uh-huh. So we touched on this earlier, but their sort of lean structure gives them an edge when it comes to profitability. Okay, so that's one. What was the second?
Their strong presence in the Jammu and Kashmir and Ladakh region.
Okay.
This gives them a certain level of pricing power,
Okay.
allowing them to charge slightly higher interest rates on their loans without losing customers.
So their home turf provides a little bit of a buffer as they venture into more competitive markets.
Exactly.
Okay, were there any other questions from the analysts that stood out?
Yeah, one analyst brought up capital adequacy,
Okay.
which is a very crucial measure for banks.
Yeah.
It basically reflects their ability to absorb potential losses
Uh-huh.
and maintain financial stability.
So like a safety net.
Exactly.
Okay.
And with ambitious growth plans, this analyst was curious about J&K Bank's plans to raise additional capital.
Did the CEO shed some light on that?
He did. He pointed out that they've been actively managing their capital position
Uh-huh.
and that they recently completed a qualified institutional placement, or QIP,
Okay.
raising a significant amount of capital, 750 crores.
Wow, that's a lot of money.
Yes. And he mentioned that they're exploring other options to further strengthen their capital base,
Okay.
such as issuing Tier 2 bonds.
So it sounds like they're thinking ahead and making sure they have enough capital to support their expansion.
Yes, exactly.
Now, we talked earlier about, all these upcoming retirements.
Right.
Were any of the analysts concerned about that? What's going to be the impact of losing all these experienced employees, especially when it comes to operational efficiency and just keeping things running smoothly?
Yeah, one analyst did bring that up.
Okay.
It's a valid concern. You know, losing experienced employees can disrupt operations.
Yeah.
But the CEO emphasized that the bank has been preparing for these retirements for some time.
Uh-huh.
They've implemented succession planning programs,
Okay.
and they're actively training and developing their younger workforce.
So it's not like they're just caught completely off guard.
No, they've been preparing.
Okay, that's good. And are they doing anything else to try to mitigate that?
Well, they're also leveraging technology to streamline processes and automate certain tasks.
Sure.
This helps reduce reliance on manual work
Uh-huh.
and ensures continuity even with staff changes.
Technology can really be a lifesaver in situations like this.
Absolutely.
So speaking of technology, did the Q&A delve into J&K Bank's digital strategy at all? I mean, the banking landscape is changing so rapidly with, everybody doing online banking and mobile banking and all that stuff.
Absolutely.
It's really make or break for banks at this point.
It is. You have to adapt.
Yeah, if you don't adapt, you're going to fall behind. So what did the CEO share about their digital roadmap?
Well, he acknowledged the importance of digital transformation,
Okay.
and he explained that they have been investing heavily in upgrading their digital infrastructure.
Yep.
Building user-friendly mobile and internet banking platforms.
Okay.
And enhancing their digital product offerings.
So things like, applying for a loan online, opening an account, online digital payment solutions.
Exactly. And equally important, they've been implementing very robust cybersecurity measures
Right.
to ensure that those digital platforms are secure and reliable.
Absolutely, because nobody wants to, have their information stolen or have their money disappear.
That's right.
So it's very important. Okay, so they're investing in the technology, they're beefing up the security. What else?
Well, they're also using data analytics to understand customer behavior better
Okay.
and to personalize their digital offerings.
Because everybody wants that personalized experience these days.
They do. It makes a big difference.
It really does. Okay, so that's the digital side of things. Now, we've talked a lot about, their focus on retail lending and expanding into new markets.
Right.
Did any analysts ask about their efforts to promote financial inclusion?
Yes.
Particularly, in those underserved segments that they're targeting.
Yes, financial inclusion is a hot topic these days.
Yeah.
And one analyst was curious about how J&K Bank's focus on segments like MSMEs and agriculture aligns with that broader mission.
Yeah, because financial inclusion is not just some, buzzword. It's actually very important for economic development.
It is.
It's about empowering people who have traditionally been excluded from the formal financial system.
Absolutely.
So what were some of the specific initiatives that the CEO highlighted?
One thing they've been doing is expanding their branch network into rural areas to bring banking services closer to people.
Okay.
They've also been promoting their microfinance and self-help group programs,
Uh-huh.
providing small loans and financial literacy training to low-income individuals and entrepreneurs.
So they're not just focusing on the wealthy customer.
No, they're trying to make a difference.
Yeah, they're trying to reach those who need it most.
Exactly.
That's fantastic. What
They're
else?
partnering with fintech companies
Okay.
to leverage those innovative technologies and develop customized financial solutions.
So they're really thinking outside the box.
They are.
Okay, fantastic. So we've got a pretty good handle on the Q&A portion of things.
Me too.
Let's move on to the investor presentation, because that usually gives us a more visual and kind of concise overview of the bank's performance and their strategic priorities.
Right.
What were some of the key highlights from the presentation?
Well, the presentation started by tracing J&K Bank's journey over the past 8 decades.
Wow.
That's quite a story.
Yeah.
Yeah, they've come a long way from their humble beginnings as a licensed bank in 1938.
Uh-huh.
They've grown into a major player in the Indian banking landscape.
Wow.
They're listed on stock exchanges.
Uh-huh.
They have a significant market capitalization.
Talk about resilience and adaptation. I mean, that's really impressive.
It is.
Okay, so what do they highlight as some of their key strengths?
Oh, they emphasize their strong brand recognition,
Okay.
their loyal customer base,
Uh-huh.
and their deep roots in the rapidly growing region of Jammu and Kashmir.
Okay.
They also highlighted their strategic focus on growing that retail loan portfolio, particularly in the MSME and agriculture segments, which aligns perfectly with what we heard from the CEO during the call.
Right, so they're walking the walk. They're not just talking the talk.
Exactly.
What else did they showcase?
Their impressive CASA ratio,
Uh-huh.
which we've already discussed.
Right.
That's a key advantage for them.
It is.
And also their turnaround story.
Uh-huh.
You know how they've done a remarkable job improving asset quality and reducing those non-performing assets.
So they're putting their best foot forward.
They are.
Highlighting, all the good things that they've achieved and where they're going.
Exactly.
Did they get into any specifics about their financial performance?
They did. They presented their key financial highlights,
Okay.
starting with their profit after tax, or PTA,
Uh-huh.
which has been on a steady upward trajectory.
Okay.
It reached 531.5 crores in the quarter ending December 2024,
Okay.
which is a jump of 26.2%
Wow.
compared to the same period last year.
That's huge.
It is. They also showed that their return on assets, or ROA,
Mhm.
has also improved, climbing from 1.15% to 1.34%,
Okay.
indicating that they're using their assets more efficiently to generate profit.
So the positive momentum continues.
It does.
What about their deposit growth?
Their deposit base is also expanding. It reached 1,040,947 crores,
Okay.
a 9.7% increase year over year.
Okay, so they've got plenty of money to work with.
They do, and this strong deposit growth is a really good sign because it provides a stable source of funds
Mm-hmm.
to fuel their lending operations.
Makes sense. What about their capital adequacy ratios?
Yes,
Those are super important for maintaining financial stability and supporting growth.
they are, and they've improved significantly.
Okay.
Their Tier 1 capital ratio,
Uh-huh.
which measures their core capital strength, is now at 12.71%,
Okay.
up from 11.74% in the same period last year.
Okay.
Their Common Equity Tier 1 ratio, or CET1,
Uh-huh.
which is considered the highest quality capital, has also increased to 11.67%, up from 10.63% a year ago.
Okay.
And their overall capital adequacy ratio, or CRAR, which includes both Tier 1 and Tier 2 capital,
Okay.
stands at a very healthy 15.809%,
Wow.
up from 14.18% in December 2023.
So they're doing well above what's required.
They are exceeding regulatory requirements,
Okay.
and they're building a very strong capital buffer to support their ambitions.
That's great. Did they give us any details about their asset quality?
They did.
That's always a big focus for banks.
It is their gross non-performing asset ratio, or GNPA, has decreased to 4.808%
Okay.
as of December 2024,
Yeah.
down from 4.84% a year earlier.
Okay. So that's good. Their asset quality is improving.
This continued improvement in asset quality is a very positive sign.
Okay.
Their net non-performing asset ratio, or NNPA,
Okay.
which factors in provisions set aside to cover potential losses,
Uh-huh.
stands at 0.94%,
Okay.
down from 0.83% in December 2023.
So a very slight increase.
Slight increase.
Okay, but still very low.
Very low.
Did they say anything about that?
They did. They said their provision coverage ratio, or PCR, which measures the adequacy of their provisions,
Okay.
remains high at 89.67%.
Okay.
This high PCR provides a cushion to absorb potential losses
Okay.
from non-performing assets, further supporting their financial stability.
That's reassuring. So it sounds like they're not just focused on reducing NPAs, but they're also thinking about, what happens if things go wrong.
Exactly.
Okay, good. What else did the presentation highlight?
Well, they showcase their growth trajectory,
Okay.
emphasizing the increasing volume of their business.
Okay.
So their total business, which includes deposits and advances, has grown by 8.1% year over year,
Wow.
reaching 2,044,733 crores.
So their overall footprint is getting bigger.
It is.
What about their customer base? Any insights into how that's doing?
Yes, they've seen a very healthy increase in their customer base,
Okay.
especially in digital channels.
Okay.
So they reported growth in credit card users, debit card users, internet banking users, and UPI users.
So they're getting more popular?
They are. And There's strong adoption of their digital banking services.
Which is good because they were just talking about how they're investing in digital.
Exactly.
Okay.
They're seeing the results.
Good. All right. What else?
Well, they highlighted their investments in technology,
Uh-huh.
their user-friendly digital platforms,
Okay.
and the expansion of those digital product offerings.
Okay.
They also reiterated their commitment to cybersecurity,
Right.
which is paramount in today's world.
Yeah, it is.
And they're leveraging those data analytics
Uh-huh.
to personalize the digital offerings.
Yeah, we talked about that earlier. That's great. Okay, so they've covered a lot of ground here.
They have.
I'm curious about their asset mix and their lending strategies. Did the presentation go into any more detail about that?
Yes, their loan portfolio is now more balanced,
Okay.
with 69% allocated to retail advances
Okay.
and 31% to corporate advances.
So that shift towards retail lending that we've been talking about
Yes.
is a deliberate strategy
It is.
to diversify their loan book and focus on those higher yielding segments.
Exactly.
Right. And we know that they're seeing really positive results in segments like personal finance.
Right. Very low MPAs.
Yeah, super low NPAs. What about the breakdown of their corporate loan portfolio?
Yes, they did provide some details on that,
Okay.
showing a slightly higher GNPA ratio in that segment,
Okay.
which is to be expected.
Sure.
Corporate lending inherently carries more risk,
Right, it does.
but they have implemented very robust risk management practices,
Okay.
including sound underwriting standards and selective credit rating criteria.
So they're being cautious, but they're not shying away.
Exactly.
Okay, did they also provide any insights into their deposit mix?
Yes,
Because that low-cost deposit base is really important
it is.
for them to maintain those nice, healthy margins.
Exactly. Their accounts ratio remains very strong at 51%.
Wow, that's fantastic.
It indicates a very stable and cost-effective source of funds
Okay.
for their lending operations.
What about their term deposits?
They broke down their term deposit portfolio,
Okay.
providing information on maturity profiles and interest rate sensitivities.
So they're really giving those investors all the information they need
They are.
to understand, how they're managing their assets and liabilities.
Exactly.
And how that might affect their profitability down the road.
That's right.
Okay, so they're being very transparent
They are.
and giving a clear picture of their financial position.
Yes.
Did they talk about capital management at all?
They did. They provided an overview of their capital structure and adequacy ratios,
Okay.
which, as we've already discussed, have improved significantly
Right.
and exceed those regulatory requirements.
Uh-huh.
They explained the composition and sources of their capital base,
Okay.
highlighting both Tier 1 and Tier 2 capital.
Mm-hmm.
And they also discussed that recent qualified institutional placement
Okay.
and their plans to explore other capital raising options like those Tier 2 bond issuances.
Okay, so they're being proactive about making sure they have enough capital to support their goals.
Absolutely.
Good. Anything else?
Yes. They highlighted their risk management framework,
Okay.
discussing their comprehensive approach to identifying, assessing, and mitigating various risks,
Okay.
including credit risks, market risk, operational risk.
So they're thinking about everything that could go wrong.
They are.
Okay.
And they outline their strategies for managing those risks,
Good.
demonstrating a real commitment to responsible and sustainable growth.
Risk management is so crucial in today's world.
It is.
So it's good to know that they're taking it seriously.
Absolutely.
Okay. What about corporate governance? Did they talk about that at all?
Yes. They dedicated a whole section to that,
Okay.
highlighting their commitment to the highest standards of corporate governance.
Okay.
So they discussed their board structure,
Uh-huh.
committee compositions,
Okay.
key policies and procedures, emphasizing transparency and accountability. They also discussed their efforts to promote diversity and inclusion,
Okay.
ensuring that a range of perspectives and experiences are represented.
Excellent, because good corporate governance is essential
It is.
for building trust with investors and the community.
Absolutely.
Okay, so they've done a really good job of highlighting, where they are today, what they've achieved, and what they're planning to do in the future. Did they wrap it all up with a clear vision for what's ahead?
They did. They reiterated their commitment to sustainable growth,
Okay.
putting the customer first,
Uh-huh.
and driving digital innovation.
Okay.
They also emphasized that strategic focus on expanding their retail loan portfolio,
Okay.
strengthening their digital capabilities,
Uh-huh.
and maintaining that strong and resilient financial foundation.
So they're firing on all cylinders.
We are.
Okay, fantastic. Well, let's take a little break.
Sounds good.
And when we come back in part 3, we'll kind of synthesize all of the key takeaways
Yeah.
from
Yeah.
the financial reports and the investor call. We'll put it all together into a nice, concise package.
Right.
So stay with us. Okay, so welcome back to the show, everybody. We just spent the last, hour or so really diving deep into J&K Bank. We've looked at their recent performance and their strategic shifts and the vision of their new CEO.
Absolutely.
So now it's time to, step back a little bit and see the forest for the trees.
Right.
What can we conclude about their current standing and their future prospects?
Well, I think it's safe to say that J&K Bank is on a positive trajectory.
Yeah, it really seems that way.
Their Q3 and 9-month results show some pretty impressive profit growth.
Mm-hmm.
They're using their assets efficiently, and they've got a solid foundation of customer trust.
Right. And that's reflected in their deposit base.
Absolutely.
But it's not just about, resting on their laurels.
Yeah.
They've been actively working to improve their asset quality
Yeah.
by reducing those non-performing assets,
Right.
which is really a key indicator of, how healthy and stable a bank is.
It is.
And it shows that they're really taking risk management seriously.
Absolutely.
Which is especially important as they, branch out into these new lending activities.
Yes.
But their shift toward retail lending, particularly in those segments like MSMEs and agriculture, that seems really smart.
It does.
I mean, they're not just, chasing higher yields.
Right.
They're diversifying their portfolio and they're going after markets that are potentially less risky.
That's right.
And it really suggests that they're, playing the long game.
Right. They're not just focused on short-term games.
They're building a sustainable business.
Exactly.
And their new CEO, Amitabh Chatterjee, he seems very confident that they can maintain that 4% net interest margin,
yes.
even as they move into these more competitive spaces.
More competitive lending environments.
Yeah, but his confidence doesn't seem misplaced. I mean, he's laid out a very clear plan.
He has.
They're going to focus on operational efficiency.
Right.
They're going to diversify their income.
Boost that fee-based income.
Yeah, and they're being proactive about strengthening their capital.
Absolutely.
And of course, they're embracing the digital revolution.
They are.
Investing in technology and user-friendly platforms to keep up with the times.
Keep up with those customer preferences.
Yeah, you got to do it. And their commitment to financial inclusion, I think that's really admirable.
It is.
It's not just about making money. It's about, doing good in the world and providing those financial services to people who need them.
Right, empowering people.
Yeah, exactly. So through those microfinance programs and the self-help group programs, they're really making a difference.
They are.
But of course, no business is perfect.
Of course not.
They've got challenges ahead.
They do.
Getting those deposits to keep growing.
Right.
The economy is always a bit of a wild card.
Always uncertain.
And competition in the banking world is fierce.
It is very competitive.
But, they seem to have a really good handle on things.
They do.
They're being proactive about managing these challenges. And their financial performance has been strong.
Performance.
And they've got some smart strategies in place.
They do.
So I'm feeling pretty optimistic about their future.
As am I.
So if somebody out there is, thinking about investing in J&K Bank, what are some of the key takeaways from all of this?
Well, they have a very strong track record of financial performance.
Uh-huh.
Their growth strategy is clear and well articulated.
Mm-hmm.
And they've shown that they're serious about managing risk and improving asset quality.
Right.
They're walking the walk.
Exactly. And they're customer-centric.
They are.
They're embracing digital innovation.
Yes.
And they're being proactive about financial inclusion.
Absolutely.
All good signs.
All very good signs.
For a bank that's, looking to succeed in the long term.
In the long term.
Yeah. And they've got an experienced leadership team.
They do.
And they're committed to good corporate governance.
Absolutely.
So all in all, I think they're definitely worth a closer look. If you're an investor and you're looking for something that's got that good balance of growth potential and stability.
Growth and stability, a great combination.
Yeah, you can't go wrong with that.
Yeah, can't.
So as we wrap up this deep dive into J&K Bank,
Right.
I want to leave our listeners with one final thought.
Okay.
They operate in a region that has a ton of growth potential.
It is.
And they're really focused on serving those communities that are often overlooked by the bigger banks.
Right, the underserved community.
Yeah, exactly. So could they become a model?
Interesting question.
For how to balance, strong financial performance with positive social impact.
It's something to watch.
Yeah, it's something to keep an eye on. And, if you want to learn more about J&K Bank,
Check out their website.
yeah, head over to their investor relations website. There's a ton of information there. You can find those detailed reports, the presentations, and the transcripts from the investor calls.
All the good stuff.
Yeah, all the good stuff that we've been talking about. So until next time, happy exploring, everybody.
Yeah.